Buongiorno a tutti and Happy New Year. I am Paolo Sironi, your host of the Banker's Bookshelf. Every first Monday of each month, I invite authors and researchers of the most interesting publications which found a prominent space in the library of curious bankers and fintech entrepreneurs. And today, I have the pleasure to host Nicola Bilotta for a conversation inspired by his new book, The Geoeconomics of Money in the Digital Age. Nicola, welcome to the show.
Hi, Paolo. Hi, all. It's a pleasure to be here with you.
Nicola, let me introduce you first to our audience. A few words. Nicola is the coordinator of the European Supervisory Digital Finance Academy, and he's a senior research associate at the Florence School of Banking and Finance, hosted by the European University Institute. He's also an associate fellow at the Istituto Affari Internazionali. And Nicola, we hosted last year some of your colleagues of the European Supervisory Digital Finance Academy and Mario Nava, Director General of the European Commission, to discuss some of the research work of the EU Supervisory Digital Finance Academy. Can you tell us just a bit briefly what the Academy is for those in the audience who may not have had the chance of listening to our second episode of 2024?
Of course, Paolo. In a few words, the SDFA is a capacity building project funded by the European Commission and delivered with the technical support of the three ESAs. We deliver training to national supervisory authorities. Today, the Academy can count 37 national supervisory authorities from 26 EU member states. And our activities span from regulation to technology.
So basically, it's a place where the regulators of the European Union gather and discuss key topics about innovation and digital transformation. But now we are here today to discuss the content of your brand new book that I think was released a few weeks ago or no less than 2 months. The title is The Geoeconomics of Money in the Digital Age. Let me synthesize a little bit what the readers can find in your book just by reading the very few lines that open up your book. In a more contentious world economy, where trade and finance are increasingly interlinked with economic security and geopolitical considerations, questions arise about the underpinnings of the US dollar's global leadership. For decades, the US dollar has reigned supreme, serving as a powerful tool of US foreign policy. However, history shows that currency dominance can shift with global power dynamics. Key questions. Will China or another power rise to challenge the US-led system? Will the international monetary system experience a process of fragmentation, or will a new global order emerge? Will financial technology ease such a change? Now, this book by Nicola delves into the intricate web of how three forces, economic dislocation, evolving geopolitical relations, and technology, could potentially foster transformations in the international monetary system. So all of this you can learn by reading the book. And today we try to touch upon some of the key insights that Nicola Bilotta researched on and framed in this new book. So first of all, Nicola, what is the international monetary system?
Paolo, this is a very good question and also a simple as well as complicated one. So the international monetary system is this intersection of institution, regulation that actually regulate how international transactions are made. I want to look a step back before starting maybe discussing a bit more why this is relevant for the current international affairs. So what is geoeconomics? Because I think many of our listeners will know what geopolitics is. It's a very mainstream term, is very abused also by newspaper, but geoeconomics has gained some traction only lately. It was a term established by Lutwak in the 90s to explain how in a globalized economy, also economic tools can be used to pursue strategic and foreign policy objectives. And I think this is becoming pretty clear with the current industrial policies implemented by the United States, the European Union, China, and I'm referring to, for example, export restrictions. So how the US, for example, are trying to undermine the developments of China in the semiconductor supply chain. I'm talking about the reshoring of parts of the supply chain. but also finance can become a geoeconomic tools. And here I need to go back also to the basic, because I think sometimes there is a bit of sensationalistic analysis on the future of the international monetary system, the US dollar, the rise of the yuan, etc. As you probably know better than me, when the euro was established, many analysts were forecasting that the euro would be replacing the US dollar, and this has not happened. Also, the similar discussion were held talking about the yen in Japan or the yuan in China, and yet the US dollar is still maintaining its leading role. So my book tried to put a bit of order in all these discussions, starting from the basic. So going back to the literature, what is an international currency? Why the US is the leading international currency? What is an international currency is very easy. As you know, a currency has three main functions: store of value, medium of payment, and unit of account. An international currency is a national currency used outside from the national border for these three functions. To put it in a very simple terms, money is like a language. Now, we can speak in English, kind of, right? And we can understand each other, and that helps us to communicate, to exchange information. Money serves a similar function. If I'm speaking a different language than yours, we need to use maybe somebody to help us translate the information that we are trying to communicate. Money does the same function. Everybody in the world economy can speak through the US dollar. But why? Because the US dollar has macroeconomic and institutional features that make the dollar a perfect international currency. I'm not talking about liquidity. I'm talking about freedom of capital, things that other currencies lacks. And I'm going to be very short because I get very excited about the topic because it's super fascinating. But most of the literature has always been focused on economic and institutional factors. However, there is a new growing number of studies that also connect the international role of a currency with geopolitical factors.
Okay, so Nicola, you said many things. Let's try to synthesize a little bit, simplifying. A currency is a language, finance is a power. We often discuss, at least lately, about the weaponization of finance, but in reality, finance has always been a matter of exerting power. You said that the currency has two facets. One is a domestic currency, the other one is international currency. And the distinction between the two is important to understand what happens right now on the world stage. Now, there are factors which are forcing this current framework we used to live in to be transformed. We know that economies are not always right, so the euro did not replace the dollar. But what I like of this conversation is that we're not forecasting a future. We are trying to identify the conditions upon which a certain future can materialize so that we see whether it is happening and we can position or not. And I think that these conditions are around three forces. So you mentioned economic dislocation, you mentioned evolving geopolitical relations, and you mentioned technology. How do these three elements, if you like, conjure for the transformation of the currency power and the monetary system?
Well, the dominance of the US dollar has always been has created always quite a big discontent across the world economy, not only from developing economies, but also from other major powers. First of all, the European Union. And this is for different reasons, economic reason as well as geopolitical reason. However, why, we have been unable to see a shift in the international monetary system and in the role of the US dollar? Well, because we lack an alternative. However, if you create the condition that force countries to look for an alternative, they will not, try to find the best option, but they're gonna try to leverage the second best option, the third best option. And why I'm saying that? Well, I give you a very small data. Since 2000, the US economic sanction have increased by 933%. And of course, this is due to, the sanction applied to individuals in Afghanistan, Iraq, or other countries, etc. But also the kind of magnitude of sanction implemented against Russia have, of course, somehow make many other countries considering the leverage that the US have through the US dollar. And I'm not only talking about, the usual suspects, so China, Iran, North Korea. I'm also talking about countries which are not, aligned with your foreign policy. I'm talking about, for example, the fact that Indonesia has launched a task force to look towards de-dollarization. I'm talking about the rise of middle powers that are trying to become more autonomous in the world scene. I'm talking about Saudi Arabia. I'm talking about India.
Okay. So there is a big movement here of players that are looking potentially for an alternative. What you're saying is that maybe is the power of the dollar, which is killing the power of the dollar in a sense today. But why do we need technology for this shift?
Indeed, I mean, as I didn't mention, but the traditional role of a currency is fostered by inertia and network effects. So this is also why the US dollar is so strong. In history, we've always seen one currency being dominated for these reasons. So why we need technology? We have the political willingness from several countries to reduce their dependency from the US dollar. However, as I mentioned, we lack an alternative. But also, it's not only about the currency, it's also about the underlying settlement and payment system that is Western or US led. So I'm gonna give you a very small example. If we take, as we are Italians and European, we take our credit card or debit card, we will see that, for example, in Italy, you will read bancomat on your credit debit card. Bancomat is very simple, is a national payment circuit. So basically, is a system that settles payments within the Italian payment system. However, bancomat is not interoperable with other European markets. So if I go to France or Germany and I pay with my credit card or my debit card, my card needs to also be co-badged or supported by the international payment circuit. And in Europe, we have two international payment systems that are dominant in the market, MasterCard and Visa. And these are US firms. I'm not saying that this is a problem. I'm not saying that is, let's say, a vulnerability. I'm only saying that because if you read reports on the digital euro, this is identified by the ECB as a major geopolitical risk. So we are lacking also the technological side to have an alternative.
Okay, a key question here. If you wanted to reduce the dominance of American card schemes, which are internationally powerful, and enhance the domestic schemes, you don't need a CBDC. You can just create the next Visa or MasterCard. So where is the CBDC coming to the forefront in terms of a competitive framework?
This is actually a very good question and also a kind of funny one because it's one of the most common questions, right? Why do we need a CBDC? So, no, without taking into account the specific case of the digital euro and talking broadly about the CBDC system, for our listeners, a CBDC, put it very simple, is a sort of digital version of cash. It's a liability issued by the central bank. And you might say, okay, but I already used electronic money, right? When I pay with my card. Yes, but that is a liability issued by your commercial bank.
Okay, so we are saying as competition doesn't come from the private market, the next Visa and the next MasterCard is not on site. Now is central banks, governments largely speaking, that are stepping in to create this new alternative. And I think that on the world stage, we have at least two for large economic blocks, which are advancing in that direction. One is the ECNY, so in China, and the other one is the digital euro. What are the difference between the concept and the creation or the intention of creation of the ECNY and the digital euro? As the digital euro is still like in a project phase, the CBDC in China already had some proof cases of execution and realization.
No. So right now, 94% of central banks are exploring the development of CBDC across the world. You have wholesale CBDC, so a sort of digital currency that is accessible only to financial institutions and specific actors. And you also have retail CBDC, which is accessible to all the population.
Okay, so there can be a retail or a wholesale that goes more international. So it's already two different configurations, which
Indeed.
most likely in the end will have to converge. But practically, what is the difference in concept between the Chinese CBDC and the European? I mean, I was speaking at the BIS Innovation Summit a couple of years ago, and I heard central bankers like Christine Lagarde with different views compared to others from the Monetary Authority of Singapore, for example. So it is not the same. They're not all equal. So the key characteristic that makes a difference.
So for me, the key driver that I like to analyze is why those different jurisdictions are thinking about local CBDC. So for China, first of all, there is a domestic objective. For anyone who have been to China, know that China is a cashless economy. And they also know that now you can pay everywhere with your app. So you have Alipay and ChatPay, they are dominating the market. The last data I've seen show that 90% of e-wallet payments done in China are done through these two providers. And this is a concentration of the market. And as China is evolving in a cashless economy, the central bank, so the People's Bank of China, fears to lose control over its monetary policy. So the first objective is a domestic objective. It's trying to provide this population with a liability issued by the central bank. And of course, also for China, and we have seen it in many different experiments, and I'm going to reconnect to the BIS because I think there is a very interesting news, is that the China is one of the global leader also in multilateral experiments with CBDC. So trying to find ways how to connect national system of CBDC. Because again, you need to think about the language, right? So the Chinese CBDC speaks a language. The digital euro, we speak another language. So you need to establish ways that are standards, that are also legal frameworks, governance, to make these two languages, these two CBDC systems, able to speak to each other. And China is leading globally the experiments on how to establish the standard for this language.
I like this because I believe that he who owns the standards owns the bank, in essence. And what about the motivation for the digital euro?
And here again is a domestic objective. But super interesting, if you read every speech by DCB, every report by DCB, you will find two keywords: pan-European and strategic autonomy. And I reconnect with what I was mentioning before. The European Union has identified a key vulnerability in its, let's say, broad strategy for strategic autonomy, which is the dependency on US payment and settlement providers, Visa, MasterCard, for example, but also new e-wallet solution like Google Pay or Apple Pay. And any private initiative, because I agree with you, Paolo, normally innovation in the payment, in the infrastructure underlying payment and settlement, always been private. In Europe, we are lacking such a solution, and the ECB thinks that a digital euro could provide the European Union with a common infrastructure to settle payments, to create a pan-European system.
Okay, so we have two reasons in Europe: the completion of the monetary union and the capital markets union as well. So that's relevant. And second, Europe is like a China bone in between two superpowers, the US and China. So it looks for its own space, right, and sovereignty. Now, the transformation of the monetary system, or the CBDC world, if you want to overlap the two, is a party of three at least. Let's put Japan on the side for once. Europe, China, and the US. But the US didn't come to the party. Why is that?
That is very interesting indeed. If you see, for example, the Biden administration as well the Trump administration are very skeptical on the digital dollar project. A few months ago, before getting in the electoral campaign, Biden signed an executive order to establish a first step to explore potentially the issuance of a digital dollar. However, the Trump administration is highly skeptical. For example, during the electoral campaign, Rubio as well as Trump called the digital dollar project as a way for the federal government, to control citizens. So basically, in the US, there is a strong underlying skepticism against the digital dollar. And this is quite challenging, right? Because you have an evolving landscape, a very quick evolving landscape with many countries exploring how to develop national CBDC. You have many experiments in the room. that will most likely also impact the future of the international monetary system. And the current dominant leader in finance and technology is lagging behind. In my book, I call it the elephant in the room. Why? Because the US actually silently also are, working on experimenting, creating capacity internally on a CBDC system. So silently they are doing it. They also run a few experiments on cross-border CBDC. However, they are still much behind other countries. However, we know that is an elephant, right? So if you move, it moves big. And therefore, I think that eventually, if we will see a CBDC system evolving rapidly and more significantly, I think the US will be able to move much faster than its counterparts.
Okay, so let's say that the motivations and the incentives are very different, and somehow the US are in the midst of trouble because there are contrasting forces where on the one side, they should move forward. The side that they fear of losing what they have is an innovator's dilemma, as Clayton Christensen would call it, and it's well described in your book. And on my side, I want to provide my two little criticisms to what I'm saying today around the CBDC discussion. The first one is when a solution is over-engineered, it will never work. So now there are many steps that can be taken in terms of transforming a monetary system that starts from the way money moves. Somehow China already went in that direction because it started like that. But I'm looking at Brazil, for example. So before embarking into CBDC, they launched PIX, which is an instant payment solution from the central bank that's scaled to 160 million users in Brazil in a couple of years, which is a nice way of getting consumers used to use a system that comes from a central bank. And if you like, if I don't mistake, it costs them less than $10 million to create. If you think about the cost potentially of a CBDC in Europe, that is striking difference. So at least I believe that we should be looking for a progression in terms of the transformation of money going in that direction, if that is the future. But the second, I hear a lot of discussions and I read a lot of very nice papers which are truly technical about how technology can be implemented for offline payments, for privacy, but I never find a thorough discussion about the implication for the transformation of economics and the monetary system. And that's why I appreciate your book, because it goes in that direction. There was a space that was empty, and you're starting filling in that gap. Now, we said at the very beginning, we do not forecast the future. We discussed in this podcast some of the reasons and the conditions that motivates a certain future to be realized. But as a last question, I would like to know from you anyway, if you would imagine what the monetary system will look like 10, 15 years from now, what would you say to describe it?
Yeah, Paolo, I totally agree with you. Technology is not enough. I think sometimes we focus on, the efficiency that a potentially CBD system could bring, but we forget that technology is not enough, and there are economic and political drivers that, incentivize private and public institutions to use specific infrastructure and systems. So in the book, I describe four scenarios. Again, I don't want to predict the future, but again, try to understand the forces that might drive scenarios. I try to withdraw four broad scenarios. So the first one is very unlikely, which is a new hegemonic currency. So a scenario in which there is an alternative to the US dollar. This is very unlikely because, as I explained before, there is no alternative to the US dollar. The second scenario, which is also very unlikely, is a global digital currency. And that was actually an idea launched by the former BIS managing director, Carstensen, that, proposed to establish within the IMF a new synthetic digital global currency. But that is very unlikely, almost mission impossible, because it will require international coordination, international trust. And we know that in this multipolar world order, this is very, very, very challenging, let's say. So there are two scenarios in my mind. The first one is fragmentation. What I mean with fragmentation is not that there are going to be, let's say, two main blocks like in the Cold War, so the Soviet Union, the US. I'm talking about small-scale attempts from many different powers to diversify from the US dollar. And we are seeing many small-scale evidence going in this direction. from small contracts to import and export oil from Saudi Arabia to other countries, for example. This will take time, but I think it's the direction in which the world economy is going. And the final scenario is it change everything to stay the same, where basically, as there is no alternative to US dollar, the US will be still able to maintain the global leadership and to also be a different year of innovation.
Very interesting four scenarios. I think you're missing just the fifth, which is a currency from Mars. We're waiting for Elon Musk to launch it. That might be impossible. So, Nicola, thank you very much for your participation to this 15th episode of the Banker's Bookshelf and the first one of 2025. Where can people find the Geoeconomics of Money in the digital age?
Is on the Routledge website as well as on Amazon.
Very good. So I had the chance of reading it, and it's an excellent book, easy to read, and required reading, I guess, for everyone who wants to get quickly up to date on the latest developments around international reserve currencies, the monetary system, and the future of money. So all stay tuned for more as more episodes and research discussions are coming. It is clear by now that the Banker's Bookshelf is a precious opportunity to learn from recognized authors and researchers like Nicola Bilotta. Their work has found a prominent space in the library of curious bankers and fintech entrepreneurs, and it is now available to you. Arrivederci, buon anno a tutti, and enjoy the Banker's Bookshelf jingle.